From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 30th, 2016. In just a moment, we'll be taking a look at the GBPUSD, Greater British Pound, versus the US dollar for today's trade analysis. But first I want to recap one of the trade suggestions made over the past few days. Yesterday we were looking here on the AUD-USD, Australian versus the US dollar. We've been studying a couple of different trends here, and if I zoom out really quickly to the weekly time frame, you can see this long-term red trend line right here. So we've been studying that in the daily trade room and noticing the fact that the market has found resistance down here along that red trend line. That'll be easier to see once we get down to the daily time frame. So there it is right there. Take a look. There's your red trend line. Market found resistance there and has started bouncing off there and going back down. And we've also been studying the green trend line as it was in a rising trend towards that red trend line, found resistance, and now the market is pushed slightly underneath that green trend line. So some interesting things happening there. Let's go ahead and zoom it in here on the daily time frame. You can see the green trend line again, the market underneath it, the pink shaded area right here, finding resistance back here on the left-hand side. We've seen historical support in this area before as well. So yesterday we decided to go ahead and place a pending sell order at 75.80, just inside that pink shaded area. Let's go ahead and zoom it in one more time. We took Fibonacci from the highest high down to the current low from yesterday, and that puts a 236 fib right at 75.78, right at the bottom of our pink shaded area. So trying to give ourselves the least amount of risk, we went ahead and put it at 75.85, just inside the pink shaded area. Well, the market never made it up to that pending order. You can see yesterday's high making it up to 75.81, today's high so far making it up to 75.79. So never made it up to 75.85. Never got into the trade. I've removed the pending order. Now, if you jumped in early, got in closer to 75.80, then you're into profit. You should be protecting profit and targeting back down towards the yellow shaded area as discussed in the trade room. Now, if you didn't get into it, I don't think entering it now is a good risk reward. Remember, your risk right now is placed above the pink shaded area. So right around where that black line is potential stop loss. So if that's your risk on a going short trade and your potential first target is the yellow zone, your risk reward is not in your favor right now. So even if you were considering going short here on the Australian, we need it to come back up to the pink zone again to become that opportunity. Next thing we'll look for the continuation of the downward slide would be the breakdown of the yellow shaded area and a continuation lower, just like what happened back here on the left-hand side. No reason to buy this currency pair at the current moment, so just looking for sells, rallies into resistance, breaks of support here for the Australian dollar, missing yesterday's trade opportunity just by a few pips into the pink shaded area. Let's move on over to the GBPUSD, Great British Pound versus US dollar. A couple of things to discuss here on the wide angle time frame. First, the, of course, Brexit vote candle in the middle. Everybody knows about that. But since we've been out of that Brexit, the market has been somewhat in a range. Take a look at the black box down here. It's been bouncing around. Resistance at the highs, supports at the lows of that black box. Let's go ahead and zoom it in one time. You can see it a little bit here. Kind of difficult to see it with this zoomed in view. But the market rallied off of it. We had the blue trend line coming up. And then right now, again, we're underneath that blue trend line. Let's zoom it in one more time. This becomes a little bit clearer as it expands out. You can see the blue trend line. We broke underneath it last Friday on Janet Yellen's comments. Pushed underneath it. We're now under the blue zone. I think that's significant for the day today. We see historical resistance here on the left. We even see some support on the far left-hand side around that blue zone. So that today, the blue shaded area will be our resistance. Now that the market's open and closed back underneath it, that becomes our resistance. So if we're looking to go short, since it's broken underneath the blue trend line, the market seems to be a dominant bearish sentiment right now. If we're looking to go short, we prefer to go short as close as possible to that blue zone because, again, our risk at this point is above the blue zone. Our stop loss would be above the blue zone. So because we know that if it gets back above there, what happens? It goes back to the green shaded area. So we don't want to stay in it if it gets above there. So going short here, into the blue zone may be our next opportunity here. The next thing we'll look for would be the breakdown of the yellow zone to continue to pressure back down, maybe back towards the bottom of the range at the bottom of the big black box we study here on this daily time frame. Clearly, the yellow zone is our current support, so definitely don't want to sell it too close to the yellow shaded area. Now, if you're on the opposite side of the fence and you think maybe it's time to buy this currency pair again, I think your best opportunity to buy it would be at the yellow shaded area, not in the middle between the blue and the yellow shaded area, because again, your risk, analyze your risk. Your risk is underneath there. So if you take those two black lines as potential risk, whether you're buying or selling, you're halfway between both of them. So you don't really want to buy or sell at the current moment. So whichever direction you want to focus in on, you need it to go up to the blue zone to sell it or down to the yellow zone to buy it. Either way you're looking at it. It was interesting. I was looking at Forex Factory this morning, and they have a little window there that shows the balance of their traders buying and selling, and it was 50-50 today for the GBPUSD. So buyers and sellers are both in the market trying to figure out which direction to take this in. I'm going to focus in on selling right now in the direction of the Brexit news and the breakdown of this blue trend line. So for me, it's a sell rally into resistance as close as possible to 3140. Let's take it down to the 4-hour time frame, zoom it out a little bit like this, and you can see the market's just been sitting on top of the yellow zone today. Another bump up here towards the blue shaded area may give us an opportunity to jump into this currency pair. I want to scroll back in time just a little bit. Now it's going to be a little difficult to see, but I want to point out this blue circle right here, or blue ovals right here in the middle. Take a look, bouncing around for several hours between the blue and the yellow shaded area. So let's see if we can take advantage of some of that kind of market movement where the market kind of just hesitates between the blue and the yellow shaded area. So I don't think it's out of the question. You might buy the yellow zone or sell the blue zone as we wait for a significant breakout. So there it is right there. There's our blue and yellow shaded area. I'm going to focus on selling. Fibonacci high down to low of our last little leg from Friday's high down to the recent low puts the 382 right at 3143, bottom of our blue shaded area. That's what I'll focus in on today for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.